Hello, welcome back. Following the news about Amazon, and if you haven't heard, you can always take a look at our news module here in our tool, and you will see that Peloton's Amazon deal is positive for the company, is what Oppenheimer's Brian Nagel said here. And you can kind of go back through the days over here, and if you were not aware of what has happened, you will see here that. Yeah, you are seeing some information here about pretty much their earnings here, but again, you can kind of see the timings because this is a lot of news over here. But you will see if you go down the whole situation, the whole story unfolding here. Peloton strikes a deal to sell fitness equipment and apparel on Amazon, and you can always click and see the exact details here. Peloton has struck a partnership with Amazon in a bid to broaden its consumer base and sell more products in the United States, etc., etc. But if you go back, you will see over here that, again, if we go higher, this is always ordered by date, and it's multiple news through the hours pretty much. You will see that Peloton shares plummet after quarterly losses top 1.2 billion here after their earnings report. So let's take a little bit of a look at what they did here. So Peloton reports big loss, decline in revenue as the company grinds through its turnaround plan. This is very hard news to hear about, especially the decline in revenue over here, and of course the big loss. But when you are declining in revenue, that points to a company that is not able to sell anymore, and that's not great at all, especially if you are looking to turn around. So let's see what happened here. Now, you will see that they reported widening losses and slumping sales for its fiscal fourth quarter here, and the company shares declined more than 20% at some point. And of course, you're gonna see that the CEO is gonna be talking about the market and expecting connected fitness will remain challenging for the foreseeable future, because once we exited the pandemic, people start going in the gym way more than before. So the pandemic highs were pretty much the pandemic actually were the highs for the company, and understandably a lot of people were buying these home workout machines. But as we are exiting this kind of era, less and less people would want to be buying these very expensive machines as well. These are very expensive items too. And you will see that Peloton also did not offer an outlook for its upcoming fiscal 2023. And they said that it sees subscribers staying flat because they are also trying to switch to a subscriber model, which is the only thing that can actually keep them from allow them actually to make money in a current fashion. Because otherwise, when you are selling this kind of hardware, you are selling it once and then you are off. You need to have some people subscribing in order to keep the sales going. But that's gonna be tough. That's gonna be a very tough thing to do in this space. Actually, keep people pretty much subscribing in a pretty much bicycle machine. I mean, it's in a cycling machine. So yeah, you'd have to find some hardcore fans, and I'm not really certain whether they would be willing to part with their money for this kind of pretty much facility. Okay, so you will see here that losses mount. Net loss widened in the 3-month period ended June 30 to 1.24 billion. So they are losing a ton here, selling bikes, that is. And again, remember, this is a company that is selling hardware pretty much, and the software-based sales are still trying to build on those, and it's gonna be like a subscription model. I really don't have a lot of faith in that, but who knows? Maybe they will be able to achieve that. But from a loss of 313 million, that's a steep decline here in terms of what they are losing. Revenue also fell 28%, which is absolutely horrible here as well. To be expected, again, exiting the pandemic, but horrible indeed. And this news actually come right after the news that Amazon is actually pretty much working their way around making Peloton work, I suppose. So hopefully they will be able to make it happen and make Peloton become pretty much a household name, I suppose. Although I'm not really sure whether Peloton would want to dive into a cheaper market, because Amazon is a lot about the price, and so I'm assuming that they would want to get some cheaper items going. We'll see what their actual plans for this company is. But having that expensive items, especially in this current period of time, may be a little bit of a stretch to be able to sell those. Now you will see that they did book 383 million of subscription revenue. Very important to see here. It's still up 36%, so they are doing a little bit better here. Very important here, and they need to have this going on for them to make sure that they can actually pursue growth, as the CEO here says, that McCarthy. made it clear it's more interested in pursuing growth on the subscription side. And it makes a ton of sense rather than putting emphasis on hardware, which I've heard that people really like already, but still, it's a one-time purchase, pretty much. Now, member count drops here, and in its latest quarter with almost 3 million connected fitness subscription here, about flat with prior quarter levels and up 27% from a year ago. In its total member count, though, declined by about 143,000 people from its prior quarter. So yeah, this is this is to be expected. Again, this is not a software that is like something like Netflix here. It's a much more specific type of software that not a lot of people will be going for and actually get this kind of cost going for them. Okay, so Peloton stock has dropped a lot, of course, around 60% year to date, but let's take a look. Is it interesting right now after this decline and basically becoming level to where it was like 2 days ago? And you will see, yeah, it had its massive increase here, then went down again, sitting at $11 right now as I'm making this video. If I refresh, it's probably going to change because it's going to be going up and down a lot. But its 1 year high has been 120 at some point, which basically is a 91% loss. So it has been completely annihilated here. You can kind of see the max chart here since its IPO days that it's pretty much going really terrible here for Peloton. Now the P/E ratio is negative. The price to free cash flow also negative. So losing money all over the place. Printing shares because that's what you do. Issue shares because you either get debt or you issue shares in order to fund your operations, and both are terrible for investors unless you use the debt in a very precise manner that allows the company to grow, and you get it at a relatively cheap price too. You don't pay too hefty of an interest rate. But these kinds of situations when you are near an IPO day, near the IPO days, and the company is not really making money, they would have to fund themselves somehow, and they do tend to resort to issuing shares, especially when the stock price is at these levels, which is absolutely insanely priced. So, in terms of the revenue, the company has been growing, although we'll see a little bit of a slump, which we don't want to see, especially for a growing company. But the net income has been pretty much going down horrible every year. So not great to see here. Now, in terms of the debt to equity ratio, is still relatively high compared to the equity that the company has. And the equity has been created through outstanding shares, remember? The company has been issuing shares. Now, if we take a look at the financial statements here, I kind of want to take a little bit of a quick look at the income statement. They have been growing for a while, but then again went down a little bit in fiscal year 2022 because again we're exiting the pandemic and things are not looking as rosy as before for the company, which is a company that of course benefited a lot from the pandemic, as we explained earlier. Lots of people staying at home buying this kind of equipment. And net income, again, negative, in negative territory, and getting more and more negative. I don't like to see that, of course. In terms of their total equity, about 600 million right now. And in terms of the total liability, 3.4 billion. And if we take a look at the cash flow statement, you will see, again, very negative net income growth and negative operating cash flow, again. With even some adjustments, we are still in negative territory. So it's only like 1 year here. And 2018 as well, which the company made just a little bit in terms of free cash flow. Very limited free cash flow and mostly negative, and much in negative territory in 2022. Really bad to see here for the company. So with all this information already, pretty much evaluated, we can go back to our stock evaluation tool and try to kind of find sort of like the golden price here. What's the price to pay for this company? Now, we do know that the revenue is not growing as much as it used to be, and it's actually going in a negative territory lately. So we're going to go much more conservative, but still we're going to assume that the company is going to be growing very nicely through the years, because otherwise it doesn't make a lot of sense. And also with the implication of Amazon connecting with Peloton, then we may be having some extra revenue growth, which could happen. I wouldn't be surprised at all if this kind of figure here does occur. In terms of the net income margins, again, the company has been in negative territories all over the place, like every year. So what can we do? Again, in such cases, we want to go with positive, but positive like profitability pretty much, so positive numbers, but not too high. So we kind of want to go with marginal profitability. We could even go 1, 3, and 5 here, but let's just go 3, 5, and 7. Which could end up being, actually these are actually expensive items, so they could be having higher net income margins if the company becomes profitable. But yeah, I will go with 3, 5, and 7. It could be more actually if again the company reaches that kind of profitability. In terms of the free cash flow margins, we're gonna go with again something that's rather typical, 80, 90, and 100, because we don't have pretty much years of many years at least of positive free cash flow here that we can actually compare with and contrast with. So we're gonna go with something that is like sort of like a standard for most companies, 80, 90, and 100. Hit calculate here, and you will see that we are getting a 7, a 21, 46 here. Remember that we used amazing revenue growth here, which could still happen. I wouldn't be surprised if this happens again. But the net income margins are, of course, very, very aggressive here. You have to remember that we do have net income margins that are negative for the company. The company is losing money here, so they are nowhere near that. You have to remember that this is just an exercise in what the company could potentially do if they do achieve profitability. They are very far from that, so there is a lot of risk to consider here. Something that is a little bit more precise potentially is go something like 15% in terms of annual return, and then go 1, 2, and 3 here. We kind of want to see that too. What happens if they achieve super marginal profitability and I ask for a higher annual return from my investment because I'm having much more risk here? That's a much more concise scenario. So in this case, we are looking at a 2, a 7, and a 17 in terms of the price to pay today. So the current price is 11, so it's only our high estimates over here that are a buy right now. Our medium ones are a little bit off and our low ones are super off. So I think that for me, the buy price for this kind of company, if I ever wanted to buy and actually risk it really, because if I even, regardless of whether I buy, if I do consider to buy, regardless of the price, it's a risk. This kind of company is risky already. We know that this is an established fact based on the financials that we have seen. But if I do want to take this risk, I would consider taking it between these two ranges here. Somewhere in between 2 and 7 would be my price. Again, if I was willing to risk it a little bit for trying to potentially get some higher return, I would still want to be buying it at 2 to 7 potentially. And then this could be a risk, but maybe it could be an interesting risk to take and just see how it plays out with the help of Amazon. Thanks for watching, guys. Let me know what you think about Peloton. And in the meantime, take a look at the video that I made earlier about Snowflake, another very interesting company which is up 22% at the time being. So thank you for watching. Leave a comment below and remember to like and subscribe. And as always, you can become a Patreon and gain access to this tool. You can find all the links in the description box below the video. And I'll see you soon. Bye-bye.